What up? So, what's going on, guys? So I really get asked a lot. I get asked, how do you find a stock? What do you look into before you buy a stock? How do you know if a stock's undervalued? So in this video, I'm gonna talk about my research process behind finding a stock, finding that next stock I'm really excited about, finding that next stock I'm going to buy. And for anyone wondering what I do before I look into a stock, this is it. Like what we're gonna cover today, this is my research process, and there's not, I don't think there's anything else I do other than what I'm going to describe in this video. And let me start off by saying two things. First, a lot of things that are done in the stock market are done off of feel, I guess you could say. Take, for example, here's an analogy I like to tell people. Look at, say, NFL analyst, all right? So let's say, I don't know, one of them comes out and says, I think Jalen Waddle will catch 100 balls this year, just for example, right? Well, there's no website, there's no Google search, there's no textbook, there's nothing that says in 2021 Jalen Waddle is gonna catch 100 balls. There's not. Like, you can do all the research you want. There is no definitive 100% evidence where anyone should go all in with every single dollar they have that Jalen Waddle is 1000% going to catch 100 balls. So how do these analysts come up with that number for Jalen Waddle catching 100 balls? Well, it's from being around the game so much, it's just from doing all the research and looking into every end, and they come to a consensus based on their research. And the stock market is a very similar thing around valuation, at least in my personal opinion. Once you look into so many different stocks, you look into so many different companies, you understand what to look for, you understand how to value companies, you understand how to project revenue, top line, bottom line numbers, all of those things. It doesn't just come overnight, but as the more and more you're around it, the more and more you're gonna get used to it, and the more and more confident you're gonna feel doing it. Second, this doesn't come without work. Like this, you're probably gonna watch this video and it's gonna take you probably a couple of years to really feel confident and really feel comfortable with this stuff I'm talking about and really understand it. If you're looking for some get rich quick scheme, you're looking for something that's gonna make you $1 million overnight, let's say, honestly, just click off the video, because this ain't the video for you. And I don't know what kind of strategy that's out there that's gonna make you $1 million overnight, but I can tell you it's not gonna be in this video. Nothing comes without the work. And the more you put into something, regardless of what it is, whether it's a sport, whether it's stock market, whether it's some sort of investing, whether it's learning a skill, the more you put into something, the more you're going to get out of it. I know that firsthand. But anyway, I hope you guys get a ton of value out of this. I really hope you guys enjoyed this video. I know I don't do a ton of these whiteboard videos anymore. They don't do too great for the YouTube algorithm, and they don't really do too well in general. Even the stock analysis videos, which is why I went away from them. I might do a stock analysis video soon if it gets enough traction, so let me know if you want to see that down in the comments. But all I ask is that you guys smash the thumbs up button. That's all I ask. That really helps this channel grow in a massive, massive way. So the first thing that I look into before I really dive into any of these long documents that we're going to get into a little bit here, the first thing that I will look at is the company profile. And I'll try to gauge what the company is, what they do, how they make money, where's that industry going over time, kind of those things. Is this an industry I am familiar with? Is this an industry I need to do more work in? I just try to find out about the very basis surface level of that company. Now, where can you find the company profile? You can find that in a number of different places. You can find it on CNBC. I personally like to go to Yahoo Finance and just read that little blurb. It's like a paragraph long, just to get that very, very basis surface level understanding. But you can also go to the investor relations page of the company. Just type in Apple Investor Relations, and there's some blurb on there that will describe what the company is. And I feel like for a lot of people, this is where the research process stops, which is pretty scary. I remember back in the day, I would do the same exact thing. I would read that little blurb and I would just be like, I think it'll go up. I think that's a good stock, without doing any research about the company, nothing behind the management team, nothing behind the financials. I would literally just read the company profile, and that would decide if I would buy the stock or not. Obviously, I've come quite a long way since 18 and 19-year-old Josh looked into this, but that is not where your research process stops. It could stop here. It could stop here just because you read the company profile and maybe it's some industry you have no interest in getting involved in. Maybe it's the pharmaceutical industry. I try to stay away from that because that's just over my head, and I feel like there's a lack of growth in that market, and there's a lot of reasons I really don't like the pharmaceutical industry. But it can stop here, and the research process can stop at any time. You could do step 1, step 2, step 3, step 4, and after any of these steps you could be like, that's not for me. I don't want to do that. It can stop at any time at all, but that is the first step that I really look into. There are many more complex steps that will take a lot longer than this, but this is the first one. Second, I'll do a little bit of a deeper dive, we'll call it deeper company profile, I'll look at a few different things to kind of gauge where the company is at. I'll take a look at the price to sales ratio, I'll take a look at the PE, I'll take a look at the forward PE, I'll take a look at what analysts have projected, I'll take a sneak peek at the balance sheet and income statement, I'll look to see if this company only has, $1 million in cash, but they have $40 billion in debt. That might not be a company I really have any desire to invest in at all, because they're in so much debt and the risk reward is not there. And if there's really any downturn or any virus that breaks out and shuts the world down, or whatever the case may be, that company might not be able to get through it. So I really want to look at the financials, see what analysts have. Granted, you should always run your own numbers, but I want to look at that as well and make sure, basically, this is a company that piques my interest and it's going to be worth my time. Now, I could very well see, a very good cash to debt ratio on the balance sheet. I could very well see, projected growth of 15 to 20%. I could see all the things that really check every single box I want to see in a stock at a service level, and I could move on to the next step. Or, like I was just saying, I could see a company that has $1 million in cash. I could see a company that has $40 billion in debt and they're projected to grow revenues -5% this year, -10% next year. And honestly, if that's the case, just for example, that's probably going to be it for my research process, and I will say goodbye, Felicia. Let's move on to the next baby. But let's just say, for example, and this is kind of going back to the first part I said, let's say we see a company that's projected to grow top line revenue 15% this year, 20% next year, and let's say I don't see any red flags on the balance sheet, they're in a really strong cash position, then we can move on to the next step, which is I will read the 10K. Now, in my opinion, this is the most important step. Now, for anyone that doesn't know what the 10K is, the 10K is basically the company's annual report that they have to file and they come out with every single year. I think, like I just said, this is the most important step because I think you're gonna learn so much about the company because these documents are long. They are not short documents. These documents are like 100, 200 pages. I've seen some that are 300, 400, 500 pages. You can't tell me you're going to read 500 pages about a company, and if you really put in the work there, that you're not going to learn anything about that company at all. It's nearly impossible in my mind. But you're gonna learn a lot about the organizational structure. You're gonna learn a lot about the long-term goals for the company. You're gonna learn more about the finances for the company, why they grew revenues, how they grew revenues, why they shrunk revenues, all of those different things. And in theory, I don't recommend doing this because obviously time is of the essence, and I've talked about this on the channel so many times, but time is just so valuable. In theory, you could, if you have the time to kill, maybe if you're a college kid on summer break and you're not working or you don't have a job or you just have nothing to do, whatever the case may be, you could skip these two first steps and just go right to this step, reading the 10K, I believe. And I've done that before too, when I've had a lot of time to kill, when the world was shut down and I wasn't working. I would do that. I would just say, let me just read the 10K for fun, because this is just fun for me. I really like just reading these reports and learning about different companies. And I feel like the more companies I look into, the more 10Ks I read, the more confident I feel, and the better of an investor I get. Because in theory, in the 10K, you're gonna learn about the company profile. You're gonna learn about the balance sheet and all those different things. Obviously, you're not gonna see the forward PE and the PE, so you might wanna take a look at that at some point, but you could definitely start with the 10K right off the bat if you really want. And as I'm reading the 10K, as opposed to these first two steps, what I do when I read the 10K is I'll take notes. I feel like that helps me personally engage better. I know some people, notes hurt them, it distracts them, it doesn't really help them get into that flow state where they can just really get in that zone. But for me, I feel much more engaged when I'm taking notes as opposed to just reading it. Sometimes my mind might wander, I might miss something important, but I really like to take notes. That's me. You're gonna learn, like I said, a lot more about the company in the 10K. You're gonna be able to really dive deeper into the balance sheet. This is where I will do that. I know we talked about service level balance sheet. This is where I really start to dive into the balance sheet and I really start to figure out those financials, why the investments are growing, why that bottom line's growing, why that top line's growing, all of those different things. Now, why do I start with the 10K? Well, if you guys have watched this channel for a while, you know I'm a long-term investor. I like to focus on the long term. And I could start with the 10Q in theory, which is the quarterly report, which we're gonna talk about in a minute. But the quarterly report is exactly what it sounds like, quarterly, like that 3-month period. The 10K is the last year. So if I really wanna learn about what's going on in the long term, I wanna read the 10K. I could start with a conference call, I could start with the 10Q like I just said, but I want to learn about what's going on in the long term, what that long-term vision is, what they did for the whole year before I get into any short-term stuff like the conference call or the 10Q or anything like that. Because this is a lot longer than the 10Q, which we're gonna talk about in a minute. And from my experience, you're gonna learn a lot more reading the 10K as opposed to the 10Q. And you know, maybe you just heard me say that these documents are 100, 200, 300, 400, they're hundreds of pages long. And you don't think that's for you. You don't want to read those long of documents. You just don't want to put in that work. That's fine. That doesn't make you a bad person at all. But in my opinion, and this isn't financial advice, but if you're not willing to do that, then you probably should not be investing in individual stocks, in my opinion. Again, it doesn't make you a bad person, but the less of this work that you do, the less you put into something, especially in the stock market, the more, instead of looking at it from an investing perspective, you're going to be gambling your money, which literally, if you want to throw your money away, you got the money to blow, hey, let's just throw 10 grand into Apple, let's throw 10 grand into Facebook, and you have not read these reports and you don't know what that company is doing, good luck. The fourth step on this list, quattro as some may call it, is the 10Q. Now, what is the 10Q? I know I just touched upon that a little bit briefly, but the 10Q is, to reiterate, the quarterly report. So companies report earnings every 3 months, 4 times for their fiscal year. And each time, every 3-month period, they come out with the 10Q, really going over their earnings, going over what happened in that previous quarter, all of those things. Now, the 10Q is not going to take you nearly as long to read as the 10K, at least in my experience. Now, there's 2 reasons for that, at least I think. First and foremost, the 10Q is not nearly as long as the 10K. The two aren't even close. This could be a few hundred pages. This could be 50 or 60 pages. It could be longer. I've read 10Qs that are a couple hundred pages, but it's more likely for this to be a couple hundred pages and this to be like 60 or 70 pages as opposed to the other way around. That's the first reason. Secondly, there's going to be some similarities between here. Most of the time, you know, the company profile structure, that's going to be the same as the 10Q. Numbers might be broken down a little bit differently, but you're going to be able to skim through it a lot quicker. I still read it, but you're gonna be like, all right, I got this, I can skip this, like I know that. Once you really get into it, you'll know where you can cut your corners. But to start, when I first started, I read the 10Q entirely, every single word. And I think you should too. I think that's very important, especially when you're first starting. But once you get into it, you'll understand where to take your shots, I guess you could say. And you might be saying, well, why are you even reading it if they're so similar? Well, that's a great question. And the thing is, let's say you read this 10K that came out in January, but you start looking into the company in October, let's say, after the 3rd quarter earnings. And let's say something changed in that time that they put in that 10Q. You're gonna wanna know that before you put your hard-earned money into this stock. Believe me, I've seen it happen, it's very possible. It doesn't always happen, but it happens. Number 5 up on this fun list we got going here is I will go CC, in other words, listen to that conference call. Now this is very important, and sometimes in these conference calls, CEOs and the management team, they'll say things that they aren't supposed to say, and things will slip out. And it makes sense because think about it. You get more relaxed once you get talking a little bit. It's not out of the realm of possibility for something to just naturally come out because your brain just shuts off for like 2 seconds, whatever the case may be. And I've seen it happen time and time again. For example, say you and I are sitting down and we're doing a podcast and I'm asking you questions and you say something you really wish you hadn't said. I've gotten texts before from people saying, hey, can you cut that out? I really don't want that in there. It makes me sound stupid, or maybe I shouldn't have said that. Like I can't say that because that's part of my business, whatever the case may be. It happens. You just get comfortable and you just loosen up a little bit. And that happens in conference calls, except in the conference calls, they don't cut that out. So I try to listen as intently as I possibly can. And I will say this is one of the harder things for me because sometimes I'm listening to them and my mind starts to wander, so I gotta rewind. And it's not out of the realm of possibility that I listen to conference calls a couple of different times. And these conference calls aren't short, they're not something you really want to listen to on 2x speed. I've tried and I don't retain nearly as much information. Usually they're about an hour. Sometimes they're a little bit shorter. If it's a newer public company, maybe you might get one that's like 30 minutes or so. Sometimes you might get one that's like an hour and a half, but I would say on average, generally, they're about an hour. As for what I do, the first time I listen to it, I really just try my best to listen to it. I will sit down, I'll go for a walk, I will just put my headphones in and I'll just listen to the conference call itself. If I hear something that's really mind-blowing, that is either a concern or maybe it's a big thumbs up in my book, I'll write it down and I'll go do some research on that later. That's the first time I listen to it. The second time I listen to it, that's when I pull out the laptop and that's when I start taking notes. I'm like, all right, they grew revenue this percentage, they did this, they did that. A lot of this you probably also saw in the 10Q, but you really want to pay attention to that question and answer session because that's really where people might slip up and that's where things might start to come out. So that's very key to pay attention to. Next, I will go to the company's investor relations page and I will look up, and keep in mind, all of this stuff that we're talking about is available on the company's investor relations page. The 10K, the 10Q, the conference call, all that stuff's available on there. You can get literally all of this information is free for you to access. And that's why I am such a proponent for free information, because literally everything you need to be successful, it's out there. People just don't want to hear that. But anyway, I'll go to the company's investor relations page and I will look at their investor presentation. This is where things, in my opinion, should really start to come together for you. After doing all this work, you've looked into the company profile, you've looked into the balance sheet, a little bit around the valuation, you've read the 10K, 10Q, you've listened to the conference call, you're looking at the investor presentation, you really start to put things together. You really start to say, okay, this company could grow revenues this much. You start to run some numbers in your head. Not so much complete revenue projections, but you can really get that little, knack. You can get that little fire going in your head. You're thinking, all right, this company could grow revenues this much, or maybe they could grow this much. And then at the same time, they could take this much market share, and then, or maybe they could take this much market share, and then maybe they could buy out this company, or maybe they could get bought out by this company. These things will be running through your mind as you get to be a better and better investor. Next, what I will do is I will look into the management team. I'll do some background research on the management team, the CEO, the CFO, the COO, see kind of their background, what they're doing, what companies they've worked at, what they have experience in, how that correlates to the industry and this company that they're working for right now. I'll watch a lot of interviews with the CEO. I'll watch a lot of interviews on YouTube. I'll basically type in the CEO, I'll type in Tim Cook Apple interview right on YouTube, and I'll go right down the list and I'll pay attention intently. I'll see how they're talking about the company. This is also an area where maybe the CEO might slip up a little bit and he might say something that he really shouldn't say, but it's too late because once you say it, it's gone. Like, it's like letting a balloon like out of your hand outside. Like once you let it go, it's gone. It's not coming back unless it gets stuck in a tree. It's not coming back. But this is why I've always said, if you really want to be a successful investor, you really need to also understand psychology and you need to understand the mind and how people work. Because think about it, I could watch 100,000 interviews with Tim Cook, and I bet you I will not find one that says, I think Apple's gonna go bankrupt over the next 5 years. He's just not gonna say that. And why would any CEO, why would anyone from any management team come out and say that? Literally, you don't. Like, you would never hear someone say that unless it's something crazy. And if you do hear someone say that, probably should not be buying that stock. That's all I'm gonna say. Maybe shorting it, but you definitely shouldn't be buying it. But the more you look into these companies, the more you're gonna understand people. You're gonna understand their mannerisms. You're gonna understand their tone of voice. You're gonna understand all these things. You're gonna be able to hear that passion in his or her voice. And you're gonna be able to say, that's someone I want running my company, or you're gonna be able to say, I don't want you running my company. The second to last step here on this list, I'll do Google searches on this company. And I'll really start to try to put things even more into perspective. I'll read different articles about what the company's doing. I'll read different articles about maybe some other people think about the company. Granted, I'll never buy a stock unless I've done the full research process and I believe in it, but it's still good to see what other people are saying. It's good to maybe see the bull case or the bear case, and it'll really put some more thoughts into your head, and maybe it'll trigger some risk and it'll trigger some other things, maybe some potential reward, some potential upside that you didn't even take into consideration the first time. I'll also, as I'm doing this, I'll look into the company's competitors. I'll see what they're doing, see if it's realistic that the company I'm looking into and thinking about buying to take enough of the market share, can grow revenues enough in this industry for it to be worth it for me to buy that stock. I'll also watch a lot of YouTube videos. I'll look out and I'll watch some stock analysis videos on the company I'm thinking about investing in. And I'll look for both the bull case and the bear case, because I want to be aware of both the worst case scenario and the best case scenario and everything in between. And the last step on this list is top and bottom line revenue projections. Now, if I do all of this, I do the first 8 steps, and I get here and I cannot run top and bottom line revenue projections for a few years out, I didn't do enough work. I got more research to do. Again, a lot of this just goes off of feel. Like, go back to the NFL example with Jalen Waddle. Like, those analysts project what he's going to do based off of feel. You draft your fantasy football team based off of who you feel is going to have the best year. Obviously, that's a little bit different because, you know, you can own Apple stock and I can own Apple stock. We're playing in the same fantasy league. You can't own Damian Harris and I can't own Damian Harris, unless the DFS league, but you know, it is what it is, that's beside the point. But it just comes down to feel after all of this research, and if you really get down to the bottom and you can't run these numbers and you don't know how to run these numbers, then you got more work to do. This could be a separate video on its own, by the way, and I might actually do one of those next. Maybe it'll be the next whiteboard video, I gotta think about it. But that is my research process into looking into a stock. That is how anyone can make their first $1,000 in the stock market by picking individual stocks. And that is going to be the end of this video. I hope you guys got a ton of value out of this. If you have any questions, you can literally Google any of these. You can Google company profile, 10K, 10Q, conference call, investor presentation, what the management team is, the places on the management team. All of these things you can Google and look up yourself, and you can do further research if need be. So if you guys got any value out of this, make sure to drop a like on the video. That really helps out the channel and really helps the channel grow massively. Remember to subscribe if you haven't already. Thanks again for watching, guys, and I will see you guys in next week's video.